Hi guys, welcome to the second part of our stock market video tutorial. If you missed the first part, click on the link below. In this video, we're going to talk about how we can earn from the stock market, around how much ang pwede nating may expect, and third, what fees are involved in stock trading. So we're gonna start with the very basic question of what are the ways we can earn through the stock market? So there are actually two ways. The first is through what we call dividends, and the second is what we call capital appreciation. So, dividends, think about it this way. Since you become a stock owner or a shareholder of a company when you buy their stocks, nagiging part owner ka ng company na yun. So, since part owner ka din, naturally, mag-expect ka na may share ka din sa kita nila, di ba? So, for example, Company A, which you have shares of, declared net income of 100 million last year. Tapos sabi nila, 20% nito, i-declare natin as cash dividends. So, ang mangyayari is 20% times 100 million, that's 20 million, right? And let's say total number of shares is also 20 million. So that's 1 peso cash dividend per share. You, who owns 100 shares of Company A, will be entitled to 100 pesos cash dividend. Yan yung share mo sa kita ng company. As long as you hold your Company A shares until what we call X date, kapag hold nyo hanggang X date, you will be entitled to that 1 peso per share. That's what a cash dividend is. Okay? The second way and more common way to earn in the stock market is via capital appreciation. So that's the simple concept of buying a stock at a low price and then selling it at a high price. That's what capital appreciation is. Now, how much are we talking about when it comes to earning in the stock market? Before we talk about that, we first have to know the concept of inflation. So yung inflation is yung pagtaas ng presyo ng mga bilihin. What we want is tumataas yung pera natin at a faster rate than inflation. So, when we invest, we compare this always first to inflation and second to other available investment instruments. Yung pinaka-common of which is your savings. So, yung interest na nakukuha mo sa savings is roughly around 0.25%. Very low. There's also the option of time deposit, which offers you higher rates, so around 1.2%. Pero yung problema dyan is, hindi mo siya ma-withdraw anytime. There's also the option of bills. Mas mataas ang interest rate dito, but similarly, nakatali yung investment mo for a specified period of time. And also, may minimum siya. Next is your stock market. Your stock market is around 13% per annum, much higher than the rest. But the key difference here is, unlike the first three investment instruments, hindi fixed ang kinikita sa stock market. So, saan ko nakuha yung 13% figure? This is the 7-year average return of the Philippine stock market. Ito, on average, ang nakukuha mong interest every year. Okay? Okay. So, now that we know that, another important concept we need to know is called compounding. Okay? So, got an example para madali. Imagine you have 200,000 pesos. Kanina sabi natin around 13% ang nakukuha natin per year sa stock market. Let's simplify this to 10% lang. If you do this for 10 years, by the end of the 10th year, meron ka na dapat 400,000 from your 200,000. But if we consider the concept of compounding, ang actual money mo na is actually 518,000. So, paano nangyari yan? Here's how it happened. So, 10% of 200,000 is 20,000. So, yun yung white bars. 20,000 every year. But that's not reality. Reality is, on the second year, ang investment mo, hindi 200,000, kung hindi 220,000. Kasi pwede mo nang i-reinvest yung kinita mo on the first year, on the second year. So 10% of 220,000 is now going to be 20,000. So kapag parati mong ni-reinvest yung earnings mo from the previous year, lumalaki yung base mo. Kaya lumalaki din yung interest mo. So much so na by the end of the 10th year, ang kinita mo na on that year is more than 47,000. That's the concept of compounding. And important yan sa stock market because the moment you sell a stock, for example, I buy a stock today, I sell it next week, I can compound as frequent as weekly. So as my base grows, so does the earnings because it is based on interest times your initial investment. That's why this is important in the stock market and which is why hindi lang actually 13% per year ang kinita mo if you take into consideration the effect of compounding. Okay? Now, the next concept I want to talk about is the concept of timing. Because hindi fixed ang kinikita sa stock market, it all depends on timing. In other words, where you buy and where you sell. So, back then, in 2011, around 4,300, 4,400 lang ang PSEI. But today, 2019, nasa around 7,500 na siya. If you look at the chart though, there are times na mataas siya, there are times na bababa siya. So your profit depends on which point you buy and which point you sell. If we base this on earnings through capital appreciation. But generally, if we look at the chart, we can tell na pataas ang investments mo sa stock market. Here is an actual example of what capital appreciation looks like in a specific company. So this chart is the company Ayala Land or Ali. If you bought 1,000 shares in the beginning of 2019, presyo niya 40.60. So your cash out is 40,600. And you sold several months later around September. Ang presyo niya is 47.85 na. So when you sell, your cash in is 47,850. Ang profit niyan is 18%, 17.9% to be exact, or around 7,250 pesos. Pretty high interest rate. But, as I said a while ago, we're going to be talking about yung fees involved in trading. Ang net gain mo dyan is actually 6,701 or a little under 17%. This is because there are fees involved in trading. So, we have what you call a trade calculator. Ano nga ba ang fees involved in trading? In total, nasa around 1.2% ang round-trip buy and sell transaction. This involves the commission, which depends on your brokerage. For us, for example, we charge the lowest rate possible, 0.0025. After that, it also involves VAT. It involves your SCCP and transaction fee, which are government fees. And lastly, on the selling side, it involves your sales tax, which is actually the biggest component sa buy and sell. So, if you, for example, buy a stock at 177.1, this stock na example na ginamit natin is SMC or San Miguel Corporation, ang break-even mo is you have to sell it at 179.3 to break even. That's the fee involved in stock trading. And remember that the only time you get charged these fees is when you trade. So for example, you leave 50,000 in your stock trading account and you don't move it. 5 years later, 50,000 pa rin yung laman ng stock trading account mo. You only get deducted or added whenever you buy or whenever you sell. So the fees are actually fully under your control. In our platform, you can see the specific charges. You just go to this, yung tinatawag naming trade calculator, and when you click on it, pwede nyo i-simulate and makita yung breakdown ng charges in stock trading. So in our next video, we're going to talk about what stock trading actually looks like in practice, how you execute a trade, and lastly, the importance of tools in stock trading and what our platform has available for you to use. Thank you very much for watching. Our social media pages are on Facebook, Instagram, and Twitter. Please like and follow. Please also like and subscribe for more videos like this. See you in our next video.